Bitcoin's having a very nice little pump today on some great news out of Brazil, but in the famous words of Han Solo, don't get cocky, kid, because we've got some real risks remaining in the equity markets, which could still drag everything down for crypto. So let's talk about it. So let's start off our conversation with that great news coming out of Brazil. Brazil has officially recognized Bitcoin as a means of payment in the country. Nice. Very nice. Setting up a great framework for crypto and regulating the use of Bitcoin as a form of payment inside Brazil. Brazil is one of the world's biggest economies. Brazil is one of the most populous countries in the world. This is big news. This is very exciting news and may have been the spark to light the fire for a little bit of a Bitcoin pump today. So this is fantastic to see. Congratulations, Brazil. This is awesome, awesome news. While we might sometimes feel like we're taking 2 steps forward, 1 step back in crypto and regulations and all this stuff, we're generally moving in the right direction, even if it doesn't always feel like that, especially when the prices are going down. So this is very, very good to see. Also, good news coming from Fidelity. Financial giant Fidelity has officially opened retail Bitcoin and crypto trading accounts. So you can now trade Bitcoin and Ethereum on your Fidelity account. So this is open up to all of like their 30 million plus customers. So very big news here for Fidelity Investments. Maybe that will provide some great exposure and potential price action as we see a new narrative forming up in the crypto markets, because now we've got a lot more people suddenly who can buy Bitcoin via their Fidelity accounts. That means something. That's big. That's big because Fidelity is a monster when it comes to the investing space, to the asset management space, and they've been big Bitcoin believers for a long time, so I'm sure they will be pushing that product to their clients. And I liked this story too. Miami mayor still takes his paycheck in Bitcoin. Not all the Bitcoin bulls have disappeared. There's still some out there happily representing, saying, I am still in Bitcoin, I'm still buying Bitcoin, and I love it. That's fantastic. And taking a quick look here at the charts, we can see currently Bitcoin has blasted up to over $17,000 on just this beautiful, look at this, this is beautiful. That's beautiful. I like to see that. Ah, feels good, man. It feels good. And look, I know. I feel it's like that meme where it's like, the price is going down, price is going down, price is going down. It's like, oh yes, we're up a couple percent. This is amazing. Yeah, we're still like 75% down from all-time highs, obviously, but still, nice to see a little bit of green in the markets after so much turmoil over the past few days. So this is really nice to see. Of course, we finally had a break away from the 50 period exponential moving averages on the 4-hour charts here. We finally had that breakaway here, moving up over the 100 currently. Taking a look at the daily charts real quick. We still have got a long way to go though before we actually get up to the 50-day exponential moving average, orange line on the chart here. Now, a very important area that a lot of people are keeping an eye on right now is $17,800 in particular, because by the time likely Bitcoin gets around here, we're going to see that actually coming into an area of coincidence with this key area of price resistance from back here on the 14th of November, as well as coming into contact with a 50-day exponential moving average. I also wanted to share this chart with you from Gert von Lagen, who pointed out that it's all Wyckoff, man, it's all Wyckoff all the time. Actually, this is very interesting because I was thinking about Wyckoff the other day, and I was thinking, was that move down to 15,500, was that our spring moment potentially here for the Wyckoff pattern? And as you can see on this chart here, it has been playing out very much according to the Wyckoff accumulation schematic. As you can see here, we had our spring here. Now we're getting our sign of strength with this move up over $17,000. Watching, of course, for a retest of a key area of price resistance and support there, and for potentially pushing up even higher if that pattern, of course, plays out. This is just a short-term thing on the 4-hour, of course. This isn't like happening on the weekly or even the daily, which would signal a potential bigger phase coming up in the markets, but still very interesting to point out here, and short-term could provide a bit of price relief in the markets. Now, before we talk about the big things weighing heavy on the equity markets, just a reminder, it's the last day to to get a massive discount for our Black Friday sale on the Wealth Mastery newsletter. So you'll get a 33% discount on a premium Wealth Mastery subscription, where we talk about all kinds of alpha on altcoins, DeFi, NFTs, all that amazing stuff. And if you sign up for a 6-month subscription, you're also going to get my Bitcoin course we just released for absolutely free. It's $147 value for free when you get that 6-month subscription. Use the link down below in the description to get signed up before the offer expires. Now let's talk real quick about equity markets. So the S&P 500 ended down on Tuesday with losses in Apple and Amazon ahead of the upcoming speech by U.S. Federal Reserve Chair Jerome Powell, where he could provide hints about the magnitude of future interest rate hikes, which kind of got me thinking about this meme here. You know, back in my day before the Bitcoin standard, one man at the Federal Reserve would decide what happened to money. It's kind of where we are right now. Everybody's sitting around waiting for Jerome Powell to say something. And everyone's going to dissect his words. Was he being too hawkish? Is he being too bullish? Is it, you know, what's the indication here? And they always kind of speak, you know, in vagueness anyway. But regardless, that's the thing that could shake markets up a bit tomorrow in either direction. If he comes out with a dovish tone, then we could see markets liking that and pushing higher. If he comes out with a hawkish tone, well, then we shall see how things work out, of course. But yeah, the Fed, man. Also, very much worth keeping in mind is the yield curve inversion. So Jurian Timmer here of Fidelity, he points out investors who are betting on a soft landing narrative should keep an eye on the yield curve. As we can see here currently, the yield curve is super freaking inverted. In fact, this is the most inverted the yield curve has been since 1981, over 40 years since we've seen this kind of crazy yield curve inversion. And what happens in this situation? Every time the yield curve is this damn inverted, we have a recession follow shortly after, right? So once we start seeing this climb back up a little bit, we should then expect a recession to come very shortly thereafter. So that's what has usually happened in history. This time different, who knows, but likely not. Likely this is what will be playing out. We see Deutsche Bank analysts still calling for another 25% down in the stock markets. We do have major risks continuing to weigh very heavy on equity markets, from the price of commodities to what's happening in Europe, supply chain issues, China's zero COVID madness, and all this kind of stuff, right? But the real wrecking ball, of course, is those interest rate hikes that keep going up. So we still do have a lot of risks in the markets. And if we get a 25% decrease from the current levels in markets, that could bring us back down to the 3,000 level. That is a level the stock markets have not seen in a very long time, right? We haven't been there since mid-2020. So if that happens, it is bad news bears, in my opinion, for crypto, unless we really truly break away and have a decorrelation moment, but there's no indication that's going to be happening at this particular time. So if these analysts are right, if the recession does lead to a massive bleed out in stocks, as some may fear, then hold on to your butts. Okay, that's it. Subscribe now. See you next time.